Hi, this is Sive Morten with the daily update on EUROFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Good morning everybody, welcome to the Forex Daily Video Research. Today the December 20th and we will continue to talk about the euro currency. Well, currently on euro it's very interesting situation, especially on the intraday charts. So we will start from the daily chart as usual and then gradually we'll shift to the lower time frames, definitely speaking to the 4-hour chart and to the hourly chart of euro. So from the first point of view, on the surface we do not see any interesting on the daily time frame of euro currency. So we already have seen this area of daily confidence resistance around 134.55, 134.60 right here. Also we have seen this pattern ABC bottom. This pattern also we have seen during the previous week ABC top, but here a couple of very important nuances that are not very obvious. First of all, look at this previously discussed pattern ABC bottom. As you remember, market has hit only 618 expansion from this AB legs right here. 134.43 was this target. Then market shows deep retracement to the downside in the beginning of this sell-off, and later erased the C point from this ABC pattern. This is a very bearish sign. Why? Because if bulls are still in charge, market should not show any deep retracements from the after reaching just the 618 expansion. Okay? So the sign that market shows deep retracement is the very bearish. The second, it's particularly should not take off the C point. It should not erase it. The fact that market has reached only 618 expansion from this pattern right here and totally collapsed is very bearish. This is the first important moment. The second important moment, look at this red line. This is the MACD predictor indicator. It shows us the trend, and currently this trend, technically trend, is bullish because price is above the red line. Okay, but look at the character of this price action. Market just stands in the range. So price action does not confirm the trend shift. Market hasn't pulled back from this area and didn't continue move to the upside. It just stands in the range. Furthermore, it even shows some strong sell-off during the previous week. This is also the bearish sign. So due to these circumstances, I believe that the bears are still control the market, and this was just a retracement from this strong sell-off. And on the coming week we can easily and should trade this swing to the downside. I think that this confidence resistance, also this just below this area, is monthly pivot point. It's right here, it's around 134.18 area. Should hold the market. Market should not move above this area. So this swing down, I believe that's absolutely tradable on the coming week. And how we will trade it, let's discuss on the lower time frames. This is 4-hour chart of euro currency. It's a lot of stuff here, so let's shift gradually from the left to right. First of all, here we can see the breakout of this triangle pattern that we have discussed on the previous week. Market has break it to the upside, hit 134.43. This is 618 expansion daily target. Also has triggered the stops that has been placed in this area, and this has allowed market to penetrate and burst the area of daily confidence right here. So market reached as far as 134.93 area. Shows nice wash and rinse, by the way. It's excellent example of wash and rinse, and totally collapsed to the downside. Okay, this is the prehistory of this pattern currently. Now, what do we have right here? First of all, look at this ABC top pattern. Okay, market has hit agreement 618 expansion target, and that's also 618 support from this low to this high. This is red line 618 support target, and now shows some signs of retracement to the upside. 100% expansion right here, 130.43 area. It also coincides with the weekly pivot support 130.37 lime dash line, and also with the deep fib support 88% support just right here, 130.28. So this will be the strong area of support. This is the first target from this ABC pattern. The second target, look at this, we have the nice butterfly buy pattern. As you know, the target of the butterfly is 127 expansion from this low to this high, or 1618 expansion. So 127 expansion is right here, 130.90. It agrees with the 786 support from this low to this high. Okay, 1618 rather is right here, 129.80. That is very close to the daily 618 expansion target around 129.96, to this target. Okay, this daily chart. And I believe that market should reach this area. Why? Because if you can see, AB leg is much slower than CD move. The CD is much steeper. It means that this is a really strong sell-off, and if market shows the really steep sell-off on the second leg, usually market move below than 100% expansion. And because of 127 expansion from the butterfly is above 100% expansion of ABC pattern. Okay, I hope you understand my logic of the thoughts, my explanation. I believe the market should hit 1618 expansion target from the butterfly pattern and daily 618 expansion target. So market can, for example, show some wash and rinse right here, break to this area is also very strong. So market just hit it, consolidates, then accomplish the target of the butterfly, or show some wash and rinse. Maybe this could be the head and shoulders on the lower time frame. It could be the railroad tracks. Even it could be even double repo on the 4-hour chart, or maybe hourly chart. Some buy signals could appear in this area or in this area. So we decided what the target are. There's possibly 130.30 area, 129.80. This is the area that we should watch for to take off the chips off the table if we are possessed ourselves on the short side of the market. But where we should enter? Well, I see a couple of areas. First area 132.16. This first area of Fibonacci resistance from this high to this low. Okay. The next area is more preferable, of course, because this is 4-hour confluence resistance 132.68, 132.71. It's also the weekly pivot point for coming week 132.65. So if we will see the sell signal in this area, we could enter from this area with the target at least this area of support and stops just above the confluence and weekly pivot point. If rather market will show deeper retracement to this confluence resistance, we can enter from this area with the stops just above the weekly pivot resistance 134 or 1, so above here. Well, with the target also this area or even 130, 129.80 area right here. Well, so you can ask me, Sive, why you offer us to trade from this area if we can see the much stronger area just above the market? It's more preferable, it's more stronger, and possibly we should enter from this area where we should take care about this level, about 132.60. Okay, let's shift to the hourly chart and I will show you why. This is hourly chart. You can see nice thrust to the downside. Although it has just 7 bars, 1, 2, 3, 4, 5, 6, 7 bars to the downside, it's not sufficient amount according to Jordan Napoli bread and butter pattern. But look at this bars, opened high, closed to low, again. It's really strong sell-off. So I think that this will be sufficient for the working of the bread and butter. This is the 3x3 moving average, green line, and market shows the penetration already of this area of this green line. So I have explained a million of times the bread and butter pattern, so you guys already have to be familiar with this. So that's why I think that this level is very suitable for the possible enter on the short side. If, for example, very often when the market shows the real sell-off on the during move to the downside, market shows just A-B retracement to the nearest Fibonacci resistance and continue move to the downside. It happens very often. Sometimes it shows some A, B, C, D retracement, shows deep retracement, but often it can happen here. So why we should miss this possibility for entry? We can act as follows. For example, market hit this area, we enter on the short side, and market continues move to the downside according to the bread and butter context. We should, in this scenario, we should move our stops to break even and just watch the move how market will respond in this area of support around 131.50. If market will break it to the downside and continue move to the downside, well, you are already in game with the tight stop or even with the break-even stop. If market will show the failure right here, so it will be just a retracement and will show some deeper retracement, that's fine, because you will get another possibility for enter from the 4-hour conference resistance from this area. So in this case you enter from this area with the stops just above 134.1. Okay, couple of scenarios. Well, if it will be the double repo rather than the bread and butter, so what does it mean? It means that market will not reach this area of resistance and show second penetration of the 3x3 and close again above it, so it will be the double repo. In this case, wait for the deeper retracement. In this case, retracement will be deeper, and I think that market should reach the daily 4-hour conference resistance. Okay, so that's been said. In general, I see the strong bearish bias on the euro currency and think that the recent swing is absolutely tradable from the short side of the market. The couple of areas to enter on the short side. The first area 132.16. If market will show on the hourly chart the bread and butter context, the bread and butter trade, just understand how we should act in this scenario. We should enter from this area and then move the stops to the break even. Initially, stops should be placed just above this area, above the confluence. If market will fail in continuation or to the downside, well, in this case you will get another possibility to enter from the 4-hour conference resistance 132.70 area with the stops just above the weekly period resistance 1. The target of the possible move, the nearest target, I suppose the daily 618 expansion target around 129.90 or area around 130.30. So the 129.80, 130.30 is the target of the possible current move to the downside.